How are investors picking up rental properties without ever showing income or tax returns or W-2s or even a job history? Well, that's the power of a DSCR loan. And a lot of people don't even know that these type of loans exist. Hey guys, I'm Ivan Simmental. I'm the broker owner of The Mortgage Standard, and I've been helping families and investors with home loans for over 11 years. And I've seen firsthand how DSCR loans can change an investor's perspective on how they buy properties. Now, these programs open doors for people who thought that they couldn't qualify. And that's why this has become one of my favorite topics to talk about. But before we get into it, I'd love if you would hit that like button and subscribe, not just to help me, but because every time that you engage, it helps this information reach more people who actually need it. The whole point of this channel is to educate, empower, and spread love through financial literacy. If even one person takes this and builds wealth for their family, this has been totally worth it. All right, let's go through the 5 biggest questions I hear about DSCR loans from my clients or from people on social media or just friends on how people are buying these types of homes. Number 1, why would somebody use a DSCR loan if conventional loans are available? Well, that is a great question. So if you qualify for conventional financing, yes, the rates and fees are usually a little bit better. But let's be real. Not everyone shows income on paper the way that us banks would love for you to show it. So maybe you are self-employed, maybe you write off everything under the sun on your taxes, or maybe your income fluctuates like a lot of people do. DSCR steps in and says, hey, look, I got your back. No, they don't say that, but they say, hey, we do care about your job, but we only care if this property pays for itself. And that's huge for investors. It's not about can you qualify personally. It's about does this deal make financial sense? Number 2, why are DSCR rates higher than regular mortgages? Well, here's the truth. The flexibility always comes with the price, right? And so with a normal mortgage, the bank goes through all of your income tax, your tax returns, your income, your debts. So they go through everything with a fine tooth and comb or whatever that saying is. They really examine to make sure that you actually qualify for the mortgage. The thing that I really like about a DSCR loan is that none of that stuff matters. The lender is taking on more risks because they're only looking at the property's cash flow. So yes, the rate is usually a little bit higher, but ask yourself this: what's more important, a slightly lower rate or the ability to close on an investment property without jumping through hoops and juggling stuff and looking like you're going through a circus? And if I'm being honest, for most investors, the trade-off is worth it. Number 3, how much money do I really need to put down? So 100%, just kidding. So this is one of the biggest myths out there. People think that DSCR is some magic zero down payment program, but it's not. Typically, you're looking at anywhere from 15 to 25% down, sometimes more depending on your credit and depending on the type of rental that you are buying, right? So for long-term rentals, 20 or 15 even to 25% is very common. For short-term rentals, think Airbnb or VRBO style properties, lenders like to see 25 to 30% down. Now, the key here that I really want you to remember is that the more skin that you put in the game, the easier it is for the property to cash flow. And that's the name of this game. Cash flow is king. Again, remember, the bank is approving you based off of the cash flow of that property. Number 4, can first-time investors really get approved? And yeah, the short answer is yes. We have helped plenty of first-time investors do this. But I want to be honest with you. It's not always as easy as if you have a big portfolio under your belt, right? So new investors, they might need a bigger down payment or stronger credit to get the deal done just because you're a brand new investor. But it's absolutely possible. And I actually think a DSCR loan is one of the best ways for beginners to get into the market. It lets you build experience without the stress of proving income that you might not have on paper yet, which a lot of us don't, but we can save the 20% down and we do know when a property is going to cash flow. So this is really good for you. Number 5, do I need extra money saved up on top of my down payment? And yes, you will. You'll hear the word reserves a lot in a DSCR loan. That just means that the lender wants to make sure that you have a safety net. So usually it's anywhere from 3 to 6 months of your mortgage payment that is sitting in a liquid account like a checking, savings, stocks, or even a retirement fund. So the money doesn't get spent. It's just to show the lender that you are not using up every single penny to buy this property and that you are somewhat a responsible human. So it's essentially a risk thing. And honestly, I think it's smart. Every investor should have reserves. Even I have reserves, because the last thing that you want is one bad month throwing your entire deal upside down and you can't pay for the mortgage and now you're getting foreclosed on, and it's not good. So guys, there you go. The top 5 questions I get on DSCR loans broken down. And if you want me to keep answering more of these, please drop your questions in the comments. And if you're ready to run numbers on a deal that you're looking at, I'll drop my calendar link below so we can talk through the deal together and see if it makes sense for you and just see what the numbers look like for you. And again, don't forget to like and subscribe, not just because it helps me, but because the more people who understand how these loans work, the more families and investors we help. That's why I do this. Thanks for watching, and I'll see you on the next one.